Madam Ho Ching, Adam Bhatia from CNBC.
Yeah.
A couple of questions. One, I'd like to address your portfolio reorganization in terms of what sectors will Temasek really be looking at, and given that you have disposed stakes in key Western financials such as Bank of America, Merrill Lynch, and Barclays, can we draw the conclusion that perhaps investments in developed nations are not top of your agenda? And if you're looking at emerging markets, what sectors exactly are you looking at investing in?
As I mentioned earlier, what we try to do is to construct a portfolio that will give us sustainable returns. So to do that, what we try first and foremost to do is to try and look at the long-term trends and invest into those long-term trends, where we see secular trends, where we see long-term growth, whether in terms of economy that is undergoing transformation for the long term. When it comes to the developed economies, that still remains open. We are open to investing in financial institutions, if and when the right opportunity comes, if and when the right valuation comes. As far as the emerging economies that you mentioned earlier, we are trying to look for areas where we think there will be sustainable long-term growth and invest into that. So one of the themes that we look very carefully at will be anything that's a proxy for the economy, and these will be areas like banking and finance, infrastructure, transport and logistics. And as economies grow, we think that the middle class will grow, and therefore we look for areas which will be proxies for middle class growth. These will be education, wealth, healthcare, telecommunications, consumer finance, microfinance, and such like. So those will be, I would say, the big trends that we're looking to invest into.
My second question is, I noticed in the early 90s with the listing of Singtel, the market portfolio for Temasek jumped up exponentially. So is there a case to be made for perhaps embarking on the listing of your other non-listed assets to increase the portfolio size, because there's, of course, an intrinsic value with these assets being listed opposed to not being listed and you marking them at book value?
Most of our portfolio is already listed. And when it comes to listing of, let's say, unlisted assets like Singapore Power or PSA, we'll leave that decision very much to the board as to when they think they need to tap the capital markets.
CNA?
We don't list for the purpose of trying to make the portfolio look good.
CNA?
Hi, Ms. Ho.
Yes.
May from Channel News Asia. I'd like to find out, Temasek has actually made some losses, and you've actually said that there's been some recovery that we've seen. Can you shed light as to, in terms of how much recovery in terms of monetary value and where are these coming from? And also, you outlined some of the midterm challenges as well as the long-term looking ahead. Can you also tell us what is your positioning in terms of how you will tackle these challenges? Thank you.
Well, in the last 4 months, the markets have recovered in general. Our portfolio value, as I mentioned earlier, rose about 42 billion to 172 billion. These will be mostly mark-to-market positions because obviously we will be using for the unlisted assets, we'll be using the last audited numbers. In terms of the medium-term risks, as I mentioned earlier, we had 2 years ago thought that there could be a risk of a downturn. We didn't anticipate that it would be so serious, and we didn't anticipate that it would originate from the US. But because of that position, we consciously and very deliberately decided to build up a stronger net cash position, and that has stood us in good stead. So today, looking forward, I think there will be some medium-term risks, but I think we have the full flexibility to do what we need to do, and we have the full flexibility today to think of what we should do for the long term rather than be constrained. So as far as we are concerned, we are in a fairly comfortable position. Simon, do you want to add anything?
Can you elaborate on your point about full flexibility?
Well, when you're in a net cash position, you have full flexibility to do anything. We are not leveraged. So, as an example, as market fell last year, we are not in a position where we are forced to sell just to top up margins and things like that, compared to investors who may have leveraged themselves. We are flexible in the sense that we can look at the underlying value, take a view whether in the long term that makes sense or not. If it makes sense, we hold on to it.